Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David and, Annabelle Droulers.
It is Annabelle Droulers, but anyway, we'll go through the show. So our top stories this morning. Asian stocks edging higher today with the attention on tech, AI following the surge in Alibaba.
Yeah, Chinese President Xi Jinping set to host his Russian counterpart today after India hailed the special relationship between New Delhi and Moscow.
New World's controlling shareholder said to mull a capital injection into the debt-laden builder as soon as the end of this year.
Plus, we speak exclusively with SinoMab BioScience on their business plans and get their outlook for the biotech sector.
All right, I've really got a spring in my step to just start this, take a look at the market action this morning because, of course, really not much of a lead actually coming into the session today. We had US markets shut overnight, so didn't really get any direction coming through in ADRs, for instance. But what we are taking a look at this morning is sort of some pretty subdued trading, but a little bit tilted to the upside. You've got to put in perspective, though, yesterday, for instance, we had the Japanese gauge down around 3% or 2% into the close, so a little bit of recovery from what we had to start the week as well. Some of those geopolitical tensions were certainly coming to the focus or to the fore. What else we're tracking in the session today is going to be in the debt auction space because we've got a Japanese 10-year government auction coming up later today. Nomura is saying, of course, the demand we've seen recently has been fairly weak, so they're still expecting that in session today. Lots of question marks. Is the BOJ going to be hiking at its meeting coming up in October? We do see the Japanese 10-year yield continuing to hover around its 2008 high that it hit around last week. In terms of what else we're tracking in the session today, really not too much action in terms of the dollar gauge. You're seeing, again, fairly flat so far. We have seen oil rising a little bit as well as we get kicked off into the morning session. Where we did see a lot of the action yesterday as well was in the EM space. In Southeast Asia, for instance, you've got a lot of political turmoil. The latest there is that in Indonesia, the finance minister, Sri Mulyani Indrawati, has pledged to improve government policies. In Thailand, for instance, you've got the People's Party, delaying who they're going to be backing or naming who they're going to be backing to form the next government. But broadly, we actually saw emerging market indexes or the EM index actually moving higher in the session yesterday, and that was very much the story around Alibaba. We had their earnings, of course, bumper results with that big focus on their improvement in the cloud division or continuing increased sales in that cloud division. And so again, you saw that really feeding into the EM index, the best day in around a week. What else we saw, of course, was that big boost it gave to Hong Kong. We are just a couple hundred points now away from 26,000 for the HSI. But in terms of what else they're seeing for futures, I mean, again, fairly steady so far, but Yvonne, some very bullish calls as well coming out on the Chinese market.
Yeah, there's still a lot of debate about how sustainable this is right now. And it seems like even when markets were lower yesterday, Hong Kong stood out massively because of the southbound flows, right? Once again, being regenerated from this whole AI theme with Alibaba. We'll see how Alibaba does after what we saw, right? That double-digit gain on the stock yesterday. We'll see if there is any sort of follow-through on that. But in terms of your agenda here today, we talked about Putin and Modi yesterday. Now Xi and Putin set to meet today as well. HSI rally, that's certainly one to watch. We talked about those southbound flows as well, where mainland investors basically bought up quite a lot of Hong Kong stocks yesterday here. There's an Evergrande hearing, which we've been talking about for weeks now. It's finally coming today. NEO earnings, so it's certainly going to be interesting because we saw some of the August sales data, which showed different divergent trends, right? So I think NEO and Geely actually posted some upbeat sales growth, but Li Auto might be the one that might be heading the other direction with deliveries declining there. And then we have a listing here today. So it's Ox. It's an AC company. So certainly one to watch here as well when it comes to the whole consumption theme in China.
Yeah, well, really interesting as well. Is it going to be sort of reigniting a further price war as well in the
It's crowded
AC?
there, yeah.
It's very crowded. But where else? I mean, it could look crowded, but of course others are very optimistic. Bullish is really just China stocks generally. And this call from Hao Hong this morning, I mean, it's extremely quotable, but he's essentially saying that we could be looking at a bull run here beyond the imagination. What's really interesting as well about this call is that he's not not saying it's this retail investor frenzy. That's sort of been one of the key reasons we talked about reigniting it. It's more around the policies around deflation.
Yes, it's about anti-involution, which he believes investors are still, I think, looking into this topic very closely here. It's something that they say is misunderstood, seldom discussed cause of this current bull market. But he says, it hasn't been fully priced in, the impact it actually might have on the market. So, all the stock, talk about savings put into stocks, all about bond yields heading lower, pushing people to buy into stocks. He actually is saying that's not really quite what's happening just yet. And Morgan Stanley's Rob Machine sort of affirms that as well. The retail investor participation is not quite there just yet. They still maybe need a little bit more in terms of the macro front to really kind of fully lean in.
Yeah, and that's actually really interesting. Let's get more on that now, bring in our Bloomberg Opinion columnist, Shui and that's exactly it. I mean, this is sort of one of the points that you're making in the column this morning, is that you do need to see maybe more foreign participation to get the locals to come into the market as well.
Absolutely. I mean, Chinese retail investors, they are not the so-called chives that can be harvested every 5 years, right? Like that's the term they use in mainland China. And then what they are looking at is foreign investors' portfolio inflow, because they consider foreign money as smart money, and they use it as a gauge to see whether Chinese stocks are worth buying. That's why, China, at least the government needs to make sure that they need to make sure to have a good narrative to attract foreign investors again.
And you mentioned the key to that is trying to slow down this rally.
That's right. We all know portfolio investors, they have lost their shirts after the 2021 regulated crackdowns, right? And then to convince their investment committees to redeploy money to China is going to take time. If it's like the rally we saw last September, in 6 trading days, CSI 300 was up more than 30%. By the time foreigners decide that they will redeploy money to China, it's too late. The stocks are too expensive. That's why I think it's very important for the government to engineer a slow bull. And they have tools to do that. We know the national team is a key participant in this year's rally, right? They have been pumping money into the stock market. They, in fact, I would think, a trigger to this year's rally. And they also need to make sure that if the market gets too frosty, they need to pull some liquidity out.
How important is Beijing in this? How important is the sort of the government approach and the narrative as well that they have around the Chinese stock market?
I think it's very important. I mean, first of all, the AI theme is huge, right? Like the shares, what we saw with Alibaba, some of it is earnings, some of it is the news report that Alibaba has come up with more advanced AI chips, right? But I think it's important for China to say, okay, we want to produce chips for influence models, for application-specific models, but not necessarily compete directly with NVIDIA, because it's not possible. NVIDIA is just so much better, and the Chinese government need to show that it can be practical, it's grounded. And also, I think geopolitical risk matters, right, with the military parade and etc. And the foreign investors are worried about return of capital. What if China gets sanctioned through and through? All the money will be gone. So I think it's important that the government also does not have too much of a soaring rhetoric, not talk about the China dream, etc., etc. Just show the world that China can be practical and China cares about return of capital.
Surely, really great piece. That was our Bloomberg Opinion columnist there, Surely Ren. And actually, just speaking of those geopolitical risks, of course, they've been a really big focus at the Shanghai Cooperation Organization Summit taking place in Tianjin. And one of the headlines there has been the Indian Prime Minister Narendra Modi saying that New Delhi and Russia share a special relationship. We've seen both sides cozying up together on the sidelines of this summit in Tianjin. But let's get more with our China correspondent, Min Lo, who's in Beijing for us this morning. So, Min, talk us through exactly what came out of these meetings and as well just how important it is, given you've got both Russia and China under a lot of global scrutiny right now.
That's right. I was in Tianjin over the last couple of days, and I have to say the journalists were mostly sequestered away in the media center, not given a lot of direct access to these political leaders. They were just passing through the main venue next door. And China, of course, has a lot of experience hosting these events. Security was extremely tight. But definitely one of the highlights, if you look at the pictures and the videos coming out of that meeting, is this visual of Xi, Putin, and Modi chatting and laughing together. It's such a visual representation of this sort of energy triangle triangle that has emerged after the Ukraine war. And one of the key bilateral meetings that we were watching yesterday was the one between Modi and Putin. And President Putin, he shipped his presidential vehicle all the way from Russia, and he literally took President Modi for a spin. It was a 15 minutes car ride for them to go from the SCO meeting venue to the venue of the bilateral meeting. But 15 minutes later, they got there, and according to sources, the two men continued to sit in the car for another 45 minutes. So it turned out to be this 1 hour informal meeting that threw the very choreographed agenda of the SCO Summit into a bit of a disarray, forcing the organizers to pivot. But it was an excellent meeting, according to President Modi. He said he discussed the deepening of ties with Russia in every sector, from trade to space to security, fertilizers. He invited Putin to visit India. That's going to take place in December. And it shows you that President Trump's efforts so far to punish India for its purchases of Russian oil perhaps has backfired a little bit, because yesterday as well, the oil minister of India had hit back at accusations that India was acting as a laundromat for the Kremlin, saying that, its purchases of oil is not breaking any rules. India's largest state-owned oil company also saying that it's going to buy every single drop of oil available from Russia as long as it remains economical.
Yeah, so certainly, affirming of this relationship, right? And certainly this sort of limousine diplomacy was really in full force yesterday. What's on the agenda here today? I believe Xi and Putin are supposed to meet as well. What's still expected?
Yes, they will be meeting. We don't know the exact time, but Xi and Putin are meeting. This is the first trip by Putin to China after the Alaska summit with President Trump. So it's his opportunity to brief Xi as well about how that meeting went, what are Putin's plans towards a ceasefire in Ukraine that could perhaps take away some of the pressure that Trump has been putting on both India and China to stop buying oil from Russia. But more critically, we are looking out for any energy deals that could come out of this meeting, because Putin is accompanied by his energy minister, by the leaders of state-owned oil company Gazprom, for example, and Russian media reported that there might be deals being signed. We know Russia has been wanting China to buy more gas from the country. It wants China to sign on to invest in building this Power of Siberia 2 pipeline that could divert a lot of the gas that used to be sold to Europe to China. But Beijing has been pushing back a little bit for their own reasons. They don't see the need to urgently step up their purchases of Russian energy. They don't want to over-rely on one country. And at the same time, there's still the threat from Trump hanging over Xi as well. So if they do sign a deal, that's definitely going to be something that has potential repercussions on U.S.-China relations and any trade deal that U.S. and China will sign as well.
Yep, spotlight's definitely on what's going on there right now. Mimin, thank you. Mimin Lo there, our China correspondent, joining us live from Beijing this morning. Still ahead, we're speaking exclusively with SinoMab BioScience's founder and CEO, Leung, Shui, on the firm's outlook and Hong Kong's role in the biotech sector. But first, BNP Paribas joins us next with their outlook on the global economy and why they now see 2 Fed cuts this year, of course, as we count down to that Fed meeting just about, less than 2 weeks from now. We're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong futures slightly to the upside here this morning. This is The China Show.
You're watching The China Show this morning. Just got the Yuan fix coming through, 710.89. The estimate had been for 713.35. We actually saw yesterday the offshore yuan slipping a little bit because we had the PBOC weakening its reference rate for the currency, first time in 4 months. This morning, not really seeing too much change to it, but there is actually an interesting call out from the Council on Foreign Relations, and they're saying that essentially China needs to allow the yuan to strengthen past 7 if you start to really make it something that can foster fair trade.
Yeah, and it's interesting that a lot of sell-side analysts are expecting that could be the direction of travel for the dollar renminbi, that, 710 certainly could be in sights, but really I think it's Goldman that said 7 a few weeks ago. So certainly there is maybe that sort of narrative that they are maybe using the currency as a way to help with its economic recovery, boost what's going on in this equity rally as well, and a potential olive branch, I believe Barclays called it, to the U.S. as well. In terms of the week ahead, we still talk talk about, right? We're still about 2 weeks away from the Fed meeting, and before that, we have so much to unpack, whether it is the jobs report on Friday, you have inflation numbers too before that Fed meeting as well, and certainly there is more chatter now of really what could happen with the Fed here. If in fact we get one strong jobs report, then what happens, right? Let's bring Luigi Speranza, Global Head of Markets 360 and Chief Economist at BNP Paribas. It seems like it's not a very tall order for a September rate cut now from the Fed, but we still have two big data prints before that as well. What are you expecting really the next few weeks?
I think after Jackson Hole, I would say that the Fed is a bit less data dependent at this stage. So of course the non-farm payrolls report on Friday is very important, but I think really a rate cut now is coming in September, and then we'll see from there. The Fed is very focused at the moment on the downside risk to the labor market, and here the revisions to past data played a very important role. They moved the data from above the break-even pace, the rate consistent with a stable unemployment rate, to below that. And so now the Fed is focused on the downside risks. It looks at inflation as transitory unless it's proved in a different way. And I think the data will not challenge this in September. And then we'll see after that. So 25 basis point cut in September is our base case.
Yeah, it seems like the base case for many others. You're talking about the downside risk. What about the upside risk? What do you see there?
Well, we think this downside risk will not materialize. And the Fed will help here with sort of a insurance cut, if you want. That's the way I regard the September cut. The labor market is being weakening, probably more than we had expected on the base of original data. But I think it's still a soft patch here. We reached peak uncertainty around the middle of the year. Now the uncertainty is going down because most of the the trade policy is more known at this stage. And so I think this should see actually recovery in the labor market. We've seen low hiring but no firing, and I guess this is just because corporates were waiting for more certainty, and here we are. So actually I think a rebound will take place, the labor market gradually improving, the same for growth, and inflation remains a risk in the medium term.
It was last jobs report where we saw those massive revisions, right? And it led to, of course, the BLS head being fired, and a lot of questions about the Fed having to cut now because the labor market is really showing some cracks. You don't think this time around we're going to see that?
No, I think this risk will not materialize. Actually, we are optimistic on the medium term.
Okay.
There is still optimism across corporates. The balance sheets of both the private, the households and the corporate sector are healthy. I think the fundamentals of the economies are quite solid, actually. Not just in the US, actually globally, it's the same story.
What about in the Eurozone? I mean, one of the big focuses this year has been on defence spending, for instance, but how's the broader economy holding up, do you think?
Well, I would use one word here, resilience. Last time I was here, the key questions from you and many investors was how deep is going to be the recession in Europe. And here we are, after a few months, no recession. The economy is running at about trend, and inflation is at 2%. So I think it's a very decent outlook, even before the fiscal stimulus kicks in. So I would say I would be optimistic also on Europe, and our forecast for next year are above consensus, reflecting the pass-through and the spillover effect from the fiscal stimulus in Germany to the rest of the Eurozone.
So is the ECB done? Done cutting?
The ECB is done, yes, that's our base case. At this point, a kind of unexpected shock is required for the ECB to re-engage. Actually, let me say, I think the next move is a hike, which can probably by the end of 2026, and that's a way we express, if you want, our optimism for growth and the possibility that inflation, after being around 2% or slightly below at the beginning of next year, might come up again.
I mean, the euro appreciation this year has been really notable, and you're at 117 now. Where does it go toward the end of the year?
We believe there is more to come. We have a target at 120. And now this reflects a number of factors. Some are technical factors, such as, hedging ratio is still relatively low, and there is still scope for some pickup. But in general, reflects also relative optimism about the fundamentals of the economy. And a key risk for the dollar is, of course, this debate about Fed independence, right. A notion which I think very risky for the currency. Is not priced in, so this is something to look at as well.
I think that's why we're seeing yield curves globally steepen, right? Whether it's sticky inflation in Japan, whether it's political risk in parts of France, and then you have also this Fed independence in question as well. What happens in the long end of the curve then? Should I continue to see more pressure in that steepening trade to continue?
Yeah, so we are bearish in general yields in Europe in particular, and we see steeper curves, again reflecting, actually for more optimistic reasons, reflecting the fiscal boost, effectively, which is not fully priced in necessarily. And again, I would add also tighter peripheral spreads. I think that's been a surprise for a number of investors, not for us. At BNP Paribas, we thought that the situation of Spain and Italy was probably a bit better than people were anticipating, and we see this trend effectively to continue. These are probably key views, together with broader weakness of the US dollar, in particular against the euro.
Yeah, how big of that theme still, the diversification away from the US?
Well, there was a lot of focus on US exceptionalism coming to an end. I don't think that's the case. But the team is here to stay, I believe, and I'm kind of optimistic on this diversification to play a role into European markets in particular.
I want to ask you about China. You have been ahead of the pack when it comes to growth forecasts, and you think 5% is growth target, hitting that pretty easy this year. And yes, the consensus seems to be patching up now.
Yeah, we probably were at the high end of the range when it comes to growth forecast, and I think now the consensus is catching up with our own forecast. So 5% is within reach. Now, it's a story related a bit more to export than domestic demand, so there are problems. Domestic demand is still a bit sluggish, but I think the fact that the target is within reach is important because it's probably reduced a bit the incentive for a major fiscal boost. We expect something moderate to come in the autumn.
Right, Luigi, thanks very much for joining us this morning. That was Luigi Speranza there, Global Head of Markets 360 and Chief Economist at BNP Paribas. Stay tuned as well for our coverage of the BNP Paribas Global Markets APAC conference that kicks off on Wednesday. Just a quick note as well, because Yvonne was mentioning earlier, we've got this Ox debut. This is the air conditioner maker this morning. Just starting that pre-market trading again ahead of its trading debut in a few minutes from now. Under pressure here today after what, again, has been already a pretty modest IPO valuation as well. But more ahead. This is Bloomberg. You're watching the China Show this morning. We're just a few minutes away from the start of trade here. You're seeing equity futures a little bit under pressure, but put it in the context, of course, because it was a very strong start to the week and a big focus as well on Alibaba numbers. This real optimism as well around their cloud business, AI in particular. Yeah, so did the earnings really kind of catapult the stock to maybe new heights? Well, certainly this is one we're watching here. Well, the stock is up some 2% in the pre-market right now, but if you look at the options market, right, the stock is basically heading towards 140 at the time when call buyers really stepped into play here right now. So if it's a 140 strike, and they're talking about the September calls as well, so they're thinking this could be happening pretty soon. The volumes for that has certainly been skyrocketing, 4 times the year-to-date average there. So much more interest there for the stock. There you go. Pop of 2% for Alibaba. The open is next. Welcome back. You're watching the China Show this morning. We're counting down to the open of markets here. You've got futures that are looking a little bit mixed, slightly higher for mainland, slightly under pressure for the Hang Seng. But overall, I mean, there's some very bullish calls who have got coming into the session as well today, including from Hao Hong. He's looking at a stock bull run that could be coming up beyond the imagination, and also just that Yuan fix, a 4th day around the 710 level, something else that could provide a little bit of assistance to equities. Yeah, certainly continue to watch that as well. BABA stock continues for another day here. So after about, 17-18% gain, we're talking about another 2% here as well. We'll see how U.S. markets open up coming back from that labor market holiday. But certainly it seems like that rally can continue at least for another
day. But we'll see what the whole tech space delivers, right? There's certainly been, more earnings like NIO to tell you about. The EV sector came out with some different sort of sales numbers growth. So there's a bit of divergence trends there that we got to kind of digest there as well. We're flat when it comes to onshore markets here, so perhaps things looking a little bit quieter here as well after what was quite a remarkable rally yesterday in Hong Kong, right? So there you go. You are seeing bonds are slightly bid up here, so the 30-year is down about 1 basis point as well. We're watching very closely what's been happening with oil markets as well. That's been focusing a lot, of course, what's been going on in the SCO and the like here. And also when it comes to earnings, that's certainly one thing we're watching very closely here as well. The EV sector, as I talked about, also. So Hong Kong is looking like this here right now. When you take a look at what's been going on, so when it comes to really Alibaba, there you go. We're seeing about upside about, 0.8%, so still seeing some decent gains there right now. 10 cents unchanged here. Meituan is heading lower. So you've got to wonder, after this rally, is there some sort of need to kind of get a bit of profit taking here as well? Robin Xing from Morgan Stanley, for one thing, did mention the retail investor participation isn't as pronounced as it was in previous sort of rallies here right now. And they're still maybe a bit hesitant about the whole macro picture for them to really kind of lean into this market as well. So if you're thinking this whole kind of household savings deploying back to stocks, that whole shift, they say, is not as material so far, right? So there you go. Hang Seng Property is one thing to watch here, right? Because you talked about HIBOR yesterday. We're basically now at levels that are back to the year-to-date highs, right? So the highest of the year, that could be a bit of a headache for some of the property developers here in the city as well. Honky dollars at sub 780 here, and watching that dollar China trade as well. Another strong fix in the PBOC here today. EV makers are doing this, right? So we had some August delivery numbers that came through here. NIO and Geely seem to be standing out according to Citi. So there you go. You're seeing some upside there. NIO is the next to also report for the second quarter. BYD recovering after what was a pretty bad earnings result as well. So we're seeing at least August do decently well to help the stock recover here. And we're talking about now a trading debut. Pretty cool reception for the AC maker here right now. Ox. Certainly there's a lot of talk about, there is a lot of competition in the whole air conditioning space in China as well. But yeah, you were talking about the valuations and all that leading up to this debut. But not the best first day of school.
Interesting, though, as well to note, just Midea, I mean, that's another air conditioner maker, and it's actually rising today in the session. So it's just an interesting comparison to note, given it's that big talk of excessive competition, rather, in the air conditioning industry.
Yep, let's take a closer look at the impact, of course, of the stock rally and what does it mean in terms of what policymakers are looking at, as well as we talked to Shui Ren about, maybe regulators are looking at this rally and they really want to engineer a slow one to try to bring more confidence back into this market as well for China. So for Cheng Shu and her team at Bloomberg Economics, they say, does this actually delay monetary easing in some ways? They think so. Maybe the PBOC reluctant to add more liquidity when equity prices are surging for fear of inflating a mini bubble. Here to discuss all that is Cheng Shu, Chief Asia Economist. So, how do you think regulators are looking at this rally right now?
I think they'll be quite cautious that they're feeling positive about it in some ways. I mean, if you look at the rally, you do see some positivities. I think if you look at the drivers, there's some sort of expectation that the government effort to curb overcapacity could help profits over the longer term. And there's a stronger push by the government for tech self-reliance that should benefit the tech sector, and there's also greater institutional participation. So all those are quite positive factors which you can think of them as longer-term support. But certainly there's a concern at this point whether the market will run ahead of itself, ahead of macro fundamentals and ahead of policies could having a visible impact on those different aspects we have talked about. So I think the regulators will have quite mixed feelings on this one.
Yeah, so if that stock market run-up delays the path for monetary easing, where does it leave fiscal policy then?
Yeah, on fiscal policy, we never expected a major step up in terms of the overall size of the stimulus, because the budget stimulus, there's quite a lot left for the second half of the year. In fact, the size of the money that needs to be spent is actually equivalent of the total for 10 years back in 2016. So that's quite a lot to deliver. It's possible that the government, it's very likely, in fact, the government will continue to improve the structure of the fiscal stimulus. We've seen those efforts, the child subsidies and the waiver of pre-school education fees. So those are the direction the government will likely go to promote consumption more. But as far as we can see, without a massive sort of rapid slowdown in growth, we think the government might not add substantively on the fiscal side.
Do you think that the role of the equity market in some ways in helping to boost confidence, create a bit of a wealth effect, do you think that there's a changing role in the equity market now and how policymakers look at it in terms of really how to boost the economy now?
Yeah, I think the line you're thinking is entirely right. I think before, equity markets, the regulators didn't pay that much attention, but it's getting more important as an overall sort of kind of asset allocation, a key component of it, especially you think, these days you can hardly put your money in the housing market. So people do want to diversify across different asset classes. So potentially the asset market, the stock market will become more important. If you look at the so-called wealth effect coming from the stock market for China, it has never been that significant. If you run models, etc., you can't really detect much of that. But going forward, potentially that could have a greater impact. And importantly, it's a key barometer for sentiment.
All right, Cheng, thanks very much for joining us this morning. That was Cheng Shui there, our chief Asia economist. And taking a look at New World this morning as well, the stock, because it's actually under pressure, down around 4% right now. But yesterday, it was gaining substantially, closing 7% to the upside. We did have a really great Bloomberg scoop on this. Essentially, the controlling shareholder, that's the billionaire Cheng family, is said to be considering injecting capital into the debt-laden builder. So that move, we've reported as well, could take place as soon as the end of this year. Let's get more with our China credit reporter, Trista Luo, who is with us. So what do we know exactly about the plan so far?
Yeah, so we heard from sources that the Cheng family is actually considering to inject $1.3 billion, and they are trying to find a partner who can, roughly to provide a similar amount of this equity stake. And we know that the plan under discussion is like they will create a joint venture together and try to inject the liquidity to New World. And some big names like Blackstone and also Capital Land are involved in such a discussion.
Okay, why do you think this capital injection or the potential of it is actually quite important for investors right now?
It's actually the first time for the Cheng family to actually come out to show they have the willingness to inject fresh money into New World after they bought out a subsidiary back in 2023. But, earlier this year when New World was, struggling in those long refinancing discussion, actually, the family actually, sit on the sideline most of the time. So that's why, as we can see, yesterday the market reacted pretty positive because investors are actually looking at, this potential capital injection, because any new money came into this company will help them to cut the debt load and help them to sustain its operation. And also it will offer them room to do, liability management exercise on its dollar bond. So that's why I think investors are watching closely on this.
All right, a great one from your team there, Trista there, our China credit reporter, Trista Luo, on the potential capital injection from New World Group there as well. Stocks are slightly down, but yes, right now we're going to continue the story. Play more ahead. This is Bloomberg.
We talk a lot about how much optimism there is in tech stocks, in the innovation space in China, but actually if there's one sector that is managing to outperform this year, it's actually Chinese healthcare stocks. You can see here on this chart, for instance, you've got a more than 90% gain in 2025 for the Hang Seng Composite Industry Index. That's the healthcare subcomponent versus what you see for the broader Hang Seng here, still doing well. It's interesting as well because we're just seeing so much optimism around biotech generally in China, and that's also when you've got more licensing taking place, there's more drug discovery, and also more earnings visibility as well, Yvonne.
Yep, and certainly one of them is a Hong Kong-listed pharmaceutical firm, SinoMab BioScience, reported a narrower loss for the first half of 2025 as they see some financial recovery. And the company also highlight what it calls a third revolution in the biopharma space, which really is driven by innovation and supply chain strategies. Yuan is the founder and chairman and CEO and joins us exclusively here in our Hong Kong studios. It's great to have you, Yuan. And really, it's interesting, right? Just you're one of the first, I think, local biotech companies to really list here in the city a few years ago. And I still remember investors at the time were still quite cautious about biotech in general. And now it's one of the best performing sectors in Hong Kong. What does the sort of biotech 3.0 look like to you now?
Well, you know that a lot of biotech companies in the mainland China actually they call themselves innovation. I call them innovation 2.0 because they use known targets, known products. They use different combinations to put them together to serve certain kind of disease indications. Those are good innovations, but then the target itself is old targets, known targets, or validated targets. So 3.0 means that actually we identify targets that are not heard before or not done before developed as a product out there. And the reason why we do this kind of innovation 3.0 is that innovation 2.0 or 1.0, they cannot handle certain disease indications with certain unmet medical needs. So we want to find a first-in-class product in order to get into the best-in-class category so that we can deal with unmet medical needs and with differentiating clinical outcomes.
So talk to us then about the drugs you've got in development, because you're targeting a variety of different indicators, but SM03 and SM17 I think are your two most promising.
Yes, especially SM17. Actually, we just had a top-line result release in April. And that is a phase 1b proof of concept data using 32 patients of serious atopic dermatitis disease patients. And the result itself indicates that our product outperforms in all areas in terms of anti-itch response, in terms of the skin clearance as well as the safety, which actually outcompetes existing best-in-class drug that targets IL-4 receptor alpha. So I think that in the future, that actually we will be able to compete with all available drugs on the market with better performance. And in fact, there are quite a lot of MNC big pharma company interested in our product.
I wanted to clarify on SM03. It looked like did you voluntarily withdraw your BLA application?
Yes,
recently?
Because we talked to the CDE, and the CDE wants us to give a supplementary clinical trial on that. And then we figured out because the differentiation itself we saw with our preclinical data indicate SM03 is even better with lupus, especially on lupus nephritis and proteinuria improvements. So we decided actually we are going to go into the lupus area as well as another indication, Alzheimer's disease. Because SM03, we found that actually it will work to remove A-beta as well as to suppress the inflammation in the brain. So
does that mean that you will resubmit then to the application, but resubmit it instead of targeting rheumatoid arthritis? Now you're targeting systemic lupus erythematosus instead.
We actually have already got our IND for lupus, so we have completed phase 1 already. I think several years ago. So we're going to move on with the phase 2 clinical trials onwards.
Okay, if you get approval, can you tell us more about what are the plans to commercialize it? And are you planning to do it by yourself or look out for a partner?
We're going to find a partner because we have decided we're going to do light assets because Hong Kong is so expensive. And then the CDMO, the ecosystem is so well established right now in mainland China. So we can leverage on this availability of different organizations to help us get our product out into the market without ourselves putting into the effort into it. We are basically an R&D company. We are very good at R&D, so we're going to focus on that.
And do you have a timeline?
The timeline within 3 years.
3 years, okay.
So then, given you are Hong Kong based, but you're talking about sort of the costs and the advantages of working with companies in mainland China, why do you choose to be based here instead?
I think Hong Kong has a lot of advantages. Number one is talent pool. And Hong Kong has a lot of talents in the field of biotechnology, finance, etc., that actually formed a small ecosystem that will promote R&D here in Hong Kong. We have one of the best universities in Hong Kong, like Hong Kong University, the Chinese University of Hong Kong, and UST, and others. And then also that actually Hong Kong is a financial hub. So that biotech actually is a money-burning kind of business. And then financing is one of the most active involvement in biotechnology. So putting all together, plus the fact that Hong Kong is an international city that will bridge China to the West through Hong Kong, and we use common law. So it will foster good collaboration between different big farmers and different companies within China and Hong Kong.
What would you like to see more? I mean, is there more that the government can do to really kind of foster and nurture more homegrown biotech companies like yourself?
I think the government is doing that already. They realize that actually this is one of the biggest type industry in addition to finance for Hong Kong's growth. And then they established Hong Kong Science Park, and there are quite a number of programs in there. They also established the Hong Kong Genome Institute to promote all this genome research, etc. So I think that they're actually moving towards the direction, and then of course, and then they also have the loop between Shenzhen and Hong Kong, and then you have a lot of activities going on in the loop that facilitate the transfer of product between China and Hong Kong. One thing I have to remind myself, they have the 1+1 mechanisms. That means product approved in China. If you do a clinical trial in Hong Kong, then you will get approval in Hong Kong for marketing. Yeah.
So you're looking at, going back to SMS03 rather, but you're looking at licensing it within 3 years. I mean, what's the goal here for SinoMab? Is it to target the Chinese market, or you have more global ambitions?
We keep the China market ourselves. So we're going to develop the product ourselves within China. But outside of China, the global market, we're going to license out. So not just SM03, SM17 is another very hot product actually out there that big pharmas are very interested in. We also have other products that actually target our reactor, alopecia reactor, and vitiligo, and another product that target osteoporosis that are of interest to a lot of MNC as well.
I was going to ask you about something a bit broader about AI. I mean, everyone talks about the application of AI, and one of the key beneficiaries seems to be the healthcare sector.
Yes.
How are you incorporating AI now into your business, if any?
AI is just a tool, and then how you're going to use the tool to facilitate your research is based on the idea that you have. For example, we may be able to use AI to modify the affinity of antibody so that we can have better safety. Or we can increase the affinity or lower the affinity using AI to help us guide us into the mutations, permutations available. Instead of doing it randomly, you can do AI to do that. This is just one example of it. And you have many more of those, and then depending on your innovation. Because even if with AI, you have to be innovative.
Yeah, and I guess innovating as well, or showing that you're innovating to an investment audience. I'm curious as well, are you looking at any sort of fundraising activities right now?
We just completed 2 financial equity finance via private placements, I think in the last 3 months. so raising about 500 million Hong Kong dollars. So for the next 2 years, the coming 2 years, we don't need additional funding for our research. Plus the fact that we're actually negotiating with big pharmas about the possibility of licensing not just one product, multiple products with these big pharmas. So if that is successful, we will have continuous stream of income from the licensing fees as well. Yeah.
All right, well, thank you very much for joining us. That was Leung Shui on there, the founder, chairman and CEO of SinoMab BioScience. Thanks so much for joining us this morning. And just as we've been discussing, I mean, it's that continued rally in gold. This is now touching at 3,500 an ounce. It is that big prospect for Fed easing that's on the horizon, and that is certainly playing into the dynamics for gold as well as geopolitical risks.
Yeah, all-time highs. We come off just a little bit, right? It was 3,500 that it briefly touched as well. That was the record that was set back in April. But this is really after we heard from silver, right? The fact that it surged the first time and really to the highest since 14 years. So it seems like precious metals overall have maybe more sprung to life now as we get more closer to that Fed meeting in just a few days or so as well. We got plenty more ahead. This is Bloomberg.
Welcome back. Some of the top global headlines that we're tracking this morning. Over 800 people are being killed. That's after a powerful earthquake rocked the eastern region of Afghanistan. At least 2,000 people were left injured when the tremor hit Kunar province, which borders Pakistan. Strong jolts were also felt in various parts of Pakistan, including Islamabad. The quake is the deadliest such disaster in more than 2 years. Lawmakers from Thailand's largest opposition party are set to meet on Tuesday. The People's Party is currently being courted by rival groups to form a government. The party earlier said it hasn't decided who to back as the next Prime Minister after the ouster of Paetongtarn Shinawatra. Despite her removal, S&P Global says it expects little disruption to government operations.
All right, we're checking markets here right now, and just as we're talking about, right, with gold briefly touching that all-time high, well, perfect timing. Shandong Gold is slightly higher here today. There was a share placement of up to 4 billion Hong Kong dollars, so the stock is slightly to the upside here today. And take a look at how EV stocks are doing. So there was a mixed picture across some of these names here as well. So BYD seems to be recovering after their earnings yesterday as well, but NIO is the next one to watch here. But yes, Li Auto seemed to be a bit of a disappointment where their sales actually did decline in August as well, but NIO and Geely, according to Citi, was actually doing better. We got plenty more to come. This is Bloomberg. Welcome back to the China Show. It's a sunny day in Shanghai, and take a look at the CSI 300, just a half hour into the session. And yeah, we're coming off a little bit here, but we're still seeing a slight upside, about 1/10 of 1%. MSCI China is also, but certainly yesterday was the big one here when it came to southbound flows, right? And certainly all of it was really down to Alibaba and what happened in those earnings as well. So we'll see if we see a continued sort of momentum in the Hong Kong market here. It seems to be a little bit more subdued here, of course, as we get closer to the military parade. That certainly is happening tomorrow as well. So certainly there's a lot at hand, but certainly the rest of the markets are doing okay. Okay.
Yeah, I mean, I think to your point, I mean, there's sort of yesterday really was that exuberance around China stocks, but Alibaba in particular, we've actually just seen Alibaba turning negative after what has been an 18.5% pop to start the week. But as well, something else that sort of not casts a shadow, but certainly plays into liquidity and the dynamics of the market today is the fact that US markets were closed on Monday, so we didn't get any sort of lead in from Wall Street. But today you actually are seeing a bit of a reversal of fortunes for the likes of the Nikkei, also the Kospi. Both of those stock markets were under pressure given you had these exemptions that were repealed on sales of advanced chip-making equipment and semiconductors to the mainland market in China. So that really played into the dynamics on Monday. Again, you're seeing a bit of an improvement in the session today. Taiwan as well, fairly steady so far. JGB yields, you can see they're just continuing to track around their highs since 2008, but it is that big focus on the JGB auction coming up later today. In Indonesia, we've just had the market coming online this morning again, moving a little bit higher. Yesterday, it closed in the red, at one point falling the most in 5 months, but really big questions around the political turmoil in Indonesia. It does appear maybe like it's looking to be relatively contained for now, but the latest we have on this is that the finance chief, this is Indrawati, of course, has vowed better policies. Her home was looted in these protests as well. The IDR, you can see there, Indonesian rupiah, again, fairly steady, but we did see the central bank in Indonesia stepping in to defend that. Big focus on the metal space this morning. You've just seen gold touching 3,500 an ounce. That's the spot reading there. You can see silver, of course, has been the big beneficiary as well, because you saw it hitting that $40 an ounce level as well. Really record highs or multi-year highs for silver as well, but it's that big bet around Fed easing.
Yeah, it seems like that really is helping the precious metals overall, right? And certainly a lot of bets that maybe September is becoming more of a sure bet that we're going to see a rate cut as well. Certainly there's a lot to talk about here. Let's bring in our MLI strategist, Mark Cranfield, joining us from Singapore right now. It is quiet, but there's still a lot ahead, it seems like, right now. We're talking about this eerie calm leading up to jobs report, inflation, and then the Fed in just a few weeks or so, Mark. But what's top of mind for you today?
It's never quiet for Markets Live. Always something going on. The gold story is actually very interesting. It goes way beyond just about lower U.S. interest rates. Of course, that's a factor. The fact that people expect the Federal Reserve to lower rates probably at the September meeting. So you would expect the U.S. dollar to be a bit weaker. But more than that, if the dollar is going to be weaker, typically the first place that would benefit the most would be the euro. But in France, we've got concerns about the yield curve in France and the debt situation there. So that's taking away some of the shine from the euro. Then you've got the yen, which is being caught up in the whole issue about is the Bank of Japan behind the curve or not. So the yen is not as strong as it might be. So you also, on top of all of that, have the concerns about Federal Reserve independence, whether the Federal Reserve is able to make policy exactly in the way it should be, transparently in relation to the data which it sees. You put all of those things into the mix, and the only place that investors appear to be really sure of what to do is to buy precious metals, with gold leading the way, silver coming up behind it. So really everything is coming together very nicely. If you were positive on gold before, you're going to be even more positive about it now when you see the risks to currencies around the world and central bank policy. It really is the time when gold not just is doing well, but this may last for a while yet.
What else we're curious whether it will last a while is the China rally, and we've come into the session this morning with calls from the likes of Hao Hong, for instance, saying that we could be setting up for a rally beyond our current imagination. What do you think the outlook is from here?
Well, certainly in the near term, the setup is still very positive for China stocks, Hong Kong stocks, and the whole tech sector there. If you look at what happened yesterday with Alibaba, the stock had a huge rally, as you've been discussing, but turnover was enormous. It was a biggest day this year so far for Alibaba stock, with a very strong close as well. For momentum players, that's the kind of signals that tell them there is more to go in this story. And we're seeing a lot of talk about China getting traction in the whole AI space that takes it away from the United States. People finally have been looking for alternatives throughout the whole of last year. People were questioning whether or not there was any other alternative to the American tech story. Well, finally, China is filling the gap. And there will be plenty of money that will be thinking, okay, it's time to shift away from North America. Let's look for places in Asia, and China obviously stands out. So that will help to fuel even more money coming towards the Chinese story. And you've got the PBOC doing their part. They're maintaining a very strong, stable currency, which is exactly what foreign investors want to see. So everything is coming together nicely. The market may look a little bit frothy right now, but if you dig deeper, for example, in the Hang Seng futures, the positioning is not as extreme as it was in October when the market sold off. So it looks as though, yes, people have been pushing towards the long side in the market, but they're not really overextended. This looks as though it can run for a while yet.
Yep, the slow bull run, as we've been calling it. Mark, thank you. Mark Cranfielder, MLI strategist, joining us out of Singapore. Let's bring in Dina Ting, head of global index portfolio management at Franklin Templeton. Dina, it's great to have you here in the region. Obviously, there's a lot to talk about with this China rally. In terms of the ETF space, what are you seeing in terms of flows back into this market?
Yeah, so we rarely see a lot of flows into China ETF, especially in the U.S. Because of all the political situation that come into play. But this year is different. And we see that across, because we have at Franklin Templeton, we have products that are listed in the U.S. as well as in Europe. We see a lot of flow going into our China funds. In fact, our China fund in the UCITS kind of grew significantly over the year. And I think what we see now is people are looking for diversification, right? You see the U.S. market has been dominant the past decade or more, and you see the concentration in the Max 7. And if you look at China, who's been trading at a discount, but yet still a significant part of not only the population, but also the GDP. And if you look at the what we call the equivalent Max 7 or prominent 10, they don't make up as much of a percentages of that particular country. So there's opportunity in terms of where they will be growing, given the flows as well as the individual that makes up for that. And then the other part of it is how they make up in the longer term team, such as the AI. So the U.S. market has all the AI who produce the actual investment across. But AI could come from like an actual business product and how it will benefit a business, not just investment to create the model that can answer all the different questions. So I think that could be like a potential differentiator in terms of creating a real world example that actually help the business moving forward.
Yeah, we know that's been sort of the big focus in China is really the application of AI and driving greater even business efficiencies. But what kind of ETFs are people favoring when you talk about China as a group? I mean, is it sort of more plain vanilla? Is there a particular sector? Is it a type like levered, for instance? Are people taking riskier bets?
Yeah, I think it's a combination, but for majority of investors, investing in a particular country is already a leap. If you look at a U.S. investor's lens, investing internationally sometimes is not even in their portfolio. So if you just get a broad-based China fund, you already get exposure that you never have in your typical portfolio. So, but of course, with the broad-based China fund, what you get is exposure into some of these different countries, and that's what you get to get a broad exposure across.
There's a lot of talk about, the national team, per se, that's been kind of maybe buying up a lot of these ETFs to support the market. How much are you seeing, if any, from your end?
I mean, we talk about like the impact of government and like what their policy is. And I think we're now in the environment where those type of things will happen, right? Look at the involvement in the U.S., look at the involvement in Japan. So China is no different in that respect. And I think those are like the type of factor that investor needs to consider, because that's how you kind of expect the environment to be. And if they do it right, it's actually going to be beneficial for the Chinese market.
You talk about this so-called prominent 10, which you just mentioned earlier. Can you explain exactly what that is and the sort of makeup of it as well?
Yes, so prominent 10 is kind of similar to like the Max 7, so they're the largest company in the respective market. So in this case, in Chinese market. And what we see in the U.S., that Magnificent 7 is very technology-centric. But in the prominent 10 in the Chinese market is a lot more diverse. And so you get a little bit more of the economy, because China is moving, I guess, from a manufacturing base into more of a service-based economy. But also, I think what they wanted to become is a broad exposure. So for investors to have a broad exposure, it's better for them. If you invest in a stock that has been performing quite well, like the Max 7, and it's priced to perfection, any negative surprises could be making it vulnerable. So having a more broad base, whatever industry that is covered, is better for investors at the end.
Yeah, I want to kind of step back and talk a little bit more, because you cover global overall, but is there, the whole talk about the need to find alternatives to U.S. assets, for example. I mean, this coming at a time when you're still seeing the S&P and equity markets in the U.S. doing very, very well thanks to the Mag 7. How much of that is actually happening, and what do you see across some of the funds that you track?
We actually starting to see it this year, which we always said, look, diversify, but we actually never actually see it through diversification. Now we're seeing like people going into South Korea, going into India, going into Taiwan as a way to diversify. And I think one thing that is very noticeable on the Liberation Day, we see like volatility spikes, and the U.S., which typically is considered like the safe haven, has like among the largest spike in terms of volatility in comparison. The Latin America, surprisingly, is the one that doesn't move, as well as India, but the different country has different impacts. So it tells you that I think the world is being rewritten, both in terms of global trade policy as well as the potential trade across. So it's a chance for all these countries to find a way and a way to move forward as well.
One story that sort of stood out last week to me, just around ETFs generally, I think it was a Bloomberg report, but quoting some research, I think, from Morningstar about the sheer number of ETFs. And in the US now, there's more ETFs than there actually are listed stocks. What does that mean for an investor, do you think? And is that something that's a positive, or does it just really make it more convoluted and complex to invest?
Well, to start, it's a positive because they're giving you more choices, right? We see evolution from ETF, where originally it was showing like exposure to a specific market cap exposure. And now you see evolution into the Maddox ETF, into Smart Beta ETF, the multi-factor ETF. So for investors, it's a choice. Of course, the market eventually is not sustainable, but the same thing like in mutual fund, eventually the fund that is not successful will eventually close down. But what ETF brings to the table is democratizing access to all the investors. So now all the different strategy that in the past is limited to institutional investors now are easily available to retail investors as well.
The market, though, in Asia is I mean, obviously not as mature. It's much more competitive here in a way, because you've got a lot of competition, not just between Asia ETFs, but it's European and US as well. How do you describe the ETF landscape here?
So in Asia, Asia as a whole, each market is quite different. And I think that's a challenge for like global firm like Franklin Templeton, is to find the best way across each of the market that we enter. So if you look at Hong Kong, I think the growth of the ETF will be coming from the retail investors. Institutional is paving the way, especially with the eMPF and other scheme that comes into play. But eventually, we are hearing it that it will happen as well. The same thing in Japan, right? It started with the institutional, but Japan is slightly different. They are not into, they have huge savings, but they don't actually put it into like equity. So I think that's like a different move across. So the way we look at it, each market is different. What's the way across? And then don't forget India. It's a huge market that is still at the cusp, and compared to like the rest of like, compared to Japan, compared to China, right? So China just passed Japan as the largest ETF market. But if you look at the population of India and the growing middle market, there's a chance that those markets will explode moving forward.
Okay, you mentioned some of these emerging themes. Obviously, AI is one. Mm-hmm. Crypto, certainly people talk about. But what are some of the things that, where are you focusing more of your time now and now?
Yeah, so right now we focus on the AI part is also how we actually using it and how we invest. But then the theme that we see is how would you quantify the impact of the geopoliticals, right? It's becoming a lot bigger piece than in the past. And then I think for majority of us is like, okay, so what's emerging, but what's enduring, but what do we do about it, right? So because there's so many noises, especially you guys hear like everything, there's a new news that's coming forward. And I think it's trying to balance out between what's emerging and what's enduring will help in terms of guiding where we go next.
Dina, thanks for joining us this morning. That was Dina Ting there, Head of Global Index Portfolio Management at Franklin Templeton. Coming up next, we're going to be hearing more about this meeting set to take place later today. Chinese President Xi Jinping sitting down with his Russian counterpart. That's coming up on Tuesday, so we'll have details of that just ahead. This is Bloomberg. Well, the front pages of Chinese media this morning are very much focused on the SCO Summit that just wrapped up in Tianjin. They're touting it as the largest ever event that the organisation has hosted. Let's get more with our China correspondent, Min Lo, joining us from Beijing this morning. So, Min, I mean, yeah, we've certainly heard them talking up some of the key takeaways from the event and the key milestones, but talk us through what's happening on the front pages.
Yeah, a lot of the coverage on Chinese state media has been focused on President Xi's speeches. He gave two yesterday, one in the morning and one in the evening to wrap up the SCO Plus meetings. And he talked about this new global governance initiative that he's putting forward with the principle of sovereign equality, that the rules of a few countries shouldn't be imposed on other countries. And it's really, China continuing to position this SCO as the counterpoint to any Western-led international organization. You also see the growing clout of the organization as the SCO admits Laos as the latest 27th member, not a full member, but a dialogue partner. And at the same time, China touted some of its commitments, such as increasing loans and investments to the region, pledging to help SCO countries increase their solar and wind power capacity by 10 million kilowatts over the next 5 years. President Xi also saying that he is proposing this new development bank, which at the end of the meeting, all members had agreed to, and this is a win for China. It's something that China had mooted about 10 years ago, but faced a bit of resistance, especially from the likes of Moscow. According to reports, Moscow wanting China to join a Russian-controlled development bank instead. So all in all, you really see how Chinese media is playing up China's role as the leader of the SCO and galvanizing all the different countries together. They are coming together to sign this joint statement as well, and you see this growing unity as the statement also mentioned things like the terrorist attacks in both India and Pakistan, giving equal weight to both countries. That was something that was a point of contention in the past as well, with India not willing to sign onto the joint statement back in June when the defense ministers' meeting of the SCO happened at the time.
Right. So, obviously Modi being there, Putin as well. Kim Jong-un, I believe, is set to arrive ahead of that parade today as well. And certainly the fact that he is going to be there at this military parade, I think the last time a North Korean leader attended a military parade in China was 1959. So how significant is this trip for Kim?
Well, yeah, it's been many years since he attended a military parade of this scale. And he is right now on a bulletproof train to China. That train has already entered Chinese border, is expected to arrive sometime later today. And it's interesting, just ahead of his trip, he visited a new missile factory in Korea, as well as a chemical materials research institution under the country's nuclear missile program. It really, he's highlighting and unveiling a new development program for its intercontinental missile. And it really is in defiance of the pressure that North Korea has been facing, especially from the likes of the US and South Korea, to end its nuclearization program. And in some ways, a snub to President Trump, who has indicated a willingness to meet with Kim, and the South Korean leader had offered to host such a meeting maybe at the sidelines of the APEC summit sometime in October this year. And Kim obviously coming to China, he's going to be standing on that day above the portrait of Mao Zedong alongside the other big brothers, President Putin and Xi. And it's really a symbolic show of unity here in challenging this US-led international order. It perhaps shows that Kim is also less willing to maybe engage with Trump, especially after the fallout of the outcomes of that first Trump-Kim summit as well.
And what's the sort of chatter then on social media? What are people saying about this military parade as well?
People are really, really excited. You just have to go to Douyin, and there are so many comments. People are saying, they have taken a half-day leave tomorrow because they really want to watch it. I saw someone else say, it makes him feel like he must come to Beijing at least once in his lifetime. Other people are saying, they're just looking at these footages of, the rehearsals, and it brings tears to their eyes. They're feeling goosebumps. A lot of these feelings of patriotism that are being stirred up here. But of course, at the same time, it's a very high-profile event. Security is going to be tight. We already got notices from the government about road closures starting from 9:30 p.m. tonight until 6 p.m. tomorrow. So many parts of Beijing's traffic is going to come to a standstill. The subway stations as well, the subway lines, they're skipping a few of the stations around the Tiananmen Square area. And we're not only looking out for the cutting-edge technology, the military technology that will be on show, but also some of the military personnel as well. There's been widespread speculation that maybe the vice chair of the Central Military Commission, He Weitong, might be absent tomorrow. There's been speculation that he is under investigation, and these things are normally not really explicitly announced. So we want to look out for whether there are any new faces attending as well that could signal maybe new personnel being promoted to important positions.
All right, Min, thank you. A lot to expect for tomorrow there. Min Lo, our China correspondent, joining us from Beijing. Just as we were talking a little more about this equity rally, and certainly when you look at signs of overheating and the like, people are looking at various metrics, right? You take a look at margin trading balance that now has jumped to a record of $320 billion. So once again, we are seeing a tremendous amount of interest, of course, in this market, and certainly this is another sort of milestone. But we'll continue to watch this one here. Equity markets, though, are still quite, I guess you could say, muted here in terms of what we're seeing now. The CSI 300 is pretty much flat. Shanghai is down, so is Shenzhen here this morning. We got plenty more ahead. This is Bloomberg.
We're nearly 1 hour into the session so far for Hong Kong and mainland markets, and we're keeping a watch on this trading debut today. This is Ox Electric. It's a maker of air conditioners. It's falling in its debut as well because they had it opened at 16.10 a share. The IPO price was 17 Hong Kong 42 cents. But lots of question marks really around this listing today. Is it just injecting further competition into a pretty crowded space?
I mean, the Hong Kong IPO market has been hot, but I think if you look at just appliance makers in general, their debuts haven't been that great, just to say that. But overall, that's what we're watching in terms of Ox here today. You take a look at how the casino operators are doing, mostly doing okay here. We had casino revenue that did rise for January to August numbers as well. And we're watching Korea defense stocks in particular here, with South Korea agreeing with the U.S. to gradually raise defense, according to some reports. Plenty more ahead. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets heading to that lunch break as well. And of course, we are actually heading into that 10-year bond auction that is happening later on this morning. And certainly, given what we saw, the dismal demand is and the 2-year last week, particularly in the long end, that's when you start to see a lot more pressure, given all these concerns about inflation that remains quite sticky in Japan as well. Equity markets are still doing quite well here in the rest of the region, seeing a slight uptick in gains this morning.
Yeah, but fairly quiet overall, I guess you could say, again, because we had U.S. shut on Monday, so no lead-in from Wall Street. And you can see the U.S. futures, the dollar, little change so far. The big movement we're actually seeing in the session is in gold and silver. We've seen both of those continuing to rally, and Mark Cranfield making the point that it's not just these bets around Fed easing, it's also questions around Fed independence as well, just among the factors that's really forcing those bullish cases to become even more bullish. But you can see here lots of green across the board this morning, also seeing some gains in the IT space as well. But let's take a look at what's happening in the EM complex in particular, because gains in IT, I mean, yesterday it was really about Alibaba, today a little bit under pressure. But also we saw moves yesterday in the Indonesian and the Thai benchmarks as well. So Thailand actually continued to close a little bit high. Indonesia, though, slumped pretty considerably. You are seeing a slight reversal in the session today, but the Thai baht, you can see there, I mean, it's little changed.
Yeah, and certainly with Indonesia, there's a lot of talk about, the central bank is stepping in when it comes to maintaining rupiah stability, liquidity as well. We got that statement from the central bank on Monday already. So it seems like right now it is helping to stabilize the market in some ways, that the central bank is there and managing it quite well. But obviously this is coming on the back of still a lot of heightened tensions there, not just in Indonesia, but, talk about Southeast Asia and Thailand in particular, too.
Yeah, that's right. Maybe where there's a little bit less stability so far, because we've actually got lawmakers from Thailand's largest opposition party set to meet Tuesday. The People's Party is currently being courted by rival groups to form a government. Our Bangkok reporter Papichka Tanaka Semipitpat is with us. And Papicha, I mean, what's the latest here on this government formation?
Annabelle, things are still very fluid at the moment as political parties are still jostling for power after the Constitutional Court removed Prime Minister Paetongtarn Shinawatra for ethics violation last week. Now the race is on to form a new government between two parties. One is Pheu Thai Party, which is leading the ruling caretaker coalition, and its former rival Phum Jai Thai Party, which exited the coalition back in June and is now in the opposition. All eyes are on the People's Party because neither coalition has the majority to back its respective prime minister candidate in the lower house when it convenes to vote, and the date for that has still yet to be set. So the People's Party's lawmakers and executive leaders are meeting on Tuesday for a second day to decide on whether it will back a candidate or not, and if so, who that will be. So we will see today whether they will reach a consensus this afternoon.
And tell us a bit more about the likely PM candidates, Papicha, and where they stand now.
Sure. The Pheu Thai Party has one remaining prime minister candidate, even though its two previous prime ministers have been removed by the Constitutional Court. Now that's Shai Kasem Nitisiri, who is a former Attorney General and Justice Minister. His candidacy has not yet been confirmed, but we expect that to be confirmed within the coming days. Meanwhile, Phum Jai Thai Party's leader, Anutin Chanwiragun, a former construction tycoon, has thrown his hat into the ring and has been canvassing support from military-backed parties as well as lawmakers defecting from the ruling coalition. Right now, neither coalition has the majority, as I previously said, so they will need the support of the People's Party, which is making demands that any prime minister candidate that it backs dissolves the House of Representatives within 4 months to call forth an election so that Thailand can have an election next year instead of in 2027. And that's the only way out of this political deadlock in the eyes of the People's Party.
Yeah, so political deadlock, I mean, I'm just taking a look at what's been happening in the Thai benchmark this year. It's down around just over 10%. Is that political instability you see a direct correlation to the performance we see in equities, or what's happening as well in the currency market?
Well, political instability will likely weigh on investor confidence and also hurt the already fragile economy and disrupt any economic momentum that Thailand has built so far. The change in the government, which seems imminent, will likely derail the U.S. trade talks a little bit and also affect policy direction. And economists have been saying that they expect more and steeper rate cuts from the Bank of Thailand, which has cut 100 basis points since October, and now the key rate is at 1.5%. Of course, the political uncertainty will likely still weigh further on investor confidence, which with foreign investors having sold more than $2.5 billion of Thai stocks this year, and the Thai benchmark, as you said, is down about 11% and has become one of the worst performers in Asia this year.
Papicha, thank you. Papicha Tanekas and Peep out there joining us out of Bangkok with the latest. Now to Indonesia now, with the finance chief Sri Mulyani Indrawati is pledging better policies after violent protests rocked the country over the weekend. In posts on Instagram, she apologized for any shortcomings and vowed to keep managing the economy. Indrawati's home was among those looted by protesters following demonstrations over rising costs and inequality.
Yeah, let's get more on that now with our opinion columnist Karishma Vaswani joining us this morning. And in your column today, you're talking about how you think these street protests reveal deeper frustrations, which they do within Indonesia. But why do you think then that given it seems sort of subdued for now, the anger could actually continue to go on?
Well, I don't think that the anger has gone away. I mean, in the short term, what President Prabowo Subianto has done to roll back the perks given to parliamentarians in terms of housing allowances and other benefits, remember, that was the catalyst, the immediate catalyst for the protests last week. The violence, of course, over the weekend that we've seen over the last 3 days or so, the catalyst for that was the deadly running over of a motorcycle taxi driver by an armored police vehicle. But that aside, I think essentially what has happened is that Indonesians who are facing a rising cost of living, the threat of mass layoffs, rather, I should say, the sense that their government is not paying attention to their economic needs, that sense hasn't changed. And fundamentally, what these protests have shown, and it's not just this set of protests, over the last 18 months or so, we have seen a degree of anger out on Indonesian streets directed at the president and his government. It's about the fact that people don't feel listened to and they don't have a sense of any agency over their lives. And I think the real arrogance that has come about as a result of some of the parliamentarians, dancing in Parliament, reportedly when these perks were announced. One legislator going so far as to say that the people who were calling for the dissolution of Parliament were the dumbest on earth. That sense that, they're sort of slaves or serfs in the country that they've elected officials to represent them, I think that anger is growing.
And you mentioned the root of Indonesia's problems are actually structural when it comes to its democracy. And this really comes back to the democracy reform movement back in the 1998 era. Why do you think that is?
Yeah, Yvonne, that's an excellent point. And, I grew up in Indonesia, as you know, and I witnessed firsthand the democratic transformation from the military dictatorship of General Suharto at the time. And there are obviously lots of parallels, but the whole point of that democratic movement called Reformasi in Indonesian was so that people would have more accountability from the people, from the politicians that were elected to serve them. There was a decentralization of power. That was the intent behind Reformasi. But what has eventually ended up happening is you see the same old players, the same old faces within the power structures, not just in government, but also in the corporate sector. And the power, both economic and political, continues to remain in the hands of the elite. I think there's no better illustration of that than Prabowo himself. Let's not forget that he is an ex-armed forces general, accused of human rights abuses during the Suharto era, of course, that he has vehemently denied, but he was also Suharto's former son-in-law, rather, I should say. So firmly and deeply entrenched within the establishment. And I think Indonesians look around at their own lives and think, well, you've got the people who are in power, who are enriching themselves and their cronies, and life for us on a daily basis doesn't get any better.
Is there more you think that he can do? I mean, Prabowo, he's been going through a lot ever since he took power, but certainly this is the biggest test he's faced since becoming, the leader of Indonesia. What more can the government do at this point, you think?
Yeah, I think in the first instance, Yvonne, a degree of humility would be nice. The arrogance, as I was talking about, that has been displayed by parliamentarians, it's something that I've heard time and time again from Indonesian observers and friends who live there. It's not simply people in the informal gig economy who feel like this. I think there is an overwhelming sense of injustice about how politicians are taking the responsibility of their jobs. So, yes, apologizing, as we've heard already from the finance minister and the president, but also suspending or perhaps disciplining parliamentarians who don't take the role of their office as seriously as they should. The other issue that I think needs to be addressed is police brutality. Under Prabowo, the military and police have had a much more prominent space in political and public life, harking back to the pre-democratic era during the Suharto dictatorship, when they were very powerful forces. And I think addressing that immediately would go a long way towards reassuring citizens that they are not turning back the clock on democracy.
Karishma, thank you. Karishma Veshwani there joining us, our Bloomberg Opinion columnist. Coming up, though, we're going to talk a bit more about the India and China ties and really taking a closer look at that amid this cautious thaw in relations. We have Bloomberg Economics there joining us to explain their take. This is Bloomberg. Well, Indian Prime Minister Narendra Modi used his first trip to China in 7 years to rebuild relations with the country as President Trump ratchets up tensions with New Delhi. And, of course, we saw this warming and, of course, the summit between Modi and Putin as well. For more, we're joined by Bloomberg Economics' Chetna Kumar, who's been tracking everything that goes down there in Tianjin. As we wrap up what happened in the SCO, Chetna, what was your key takeaway here? And what do you think India stands to gain from these talks?
Thanks, Yvonne. Happy to be here. We think the summit, for all of its pageantry and photo ops, is more symbolic than a substantive reset in India-China ties. Ties are improving, but they're improving from a rock bottom of 2020 when the relationship fell apart because of border clashes. So there are some improvements in terms of direct flights being announced, visa restrictions on Chinese executives and workers flying into India being removed, but there's not a lot of substantive economic cooperation that we see happening immediately or a big pivot in India's strategy towards China.
Yeah, exactly. I think one of the things that stood out to me was this reporting we had that the President Xi had made 4 suggestions to deepen India ties. When you read into it, it was sort of difficult to get anything concrete from it. So beyond sort of resuming direct flights, what else could be next, do you think?
I think some of the things on the table are obviously improving the border management and trying to figure out this intractable border dispute. These both sides are locked in. India would like to see a disengagement of troops, which have been staring down each other since 2020 on India's northeastern border. There are questions about improving travel, people-to-people ties, removing restrictions on Chinese investments coming into India. And from India's perspective, sort of correcting the trade imbalance. China buys almost nothing from India. But in terms of immediate things that could come out, we see some scope for like immediate economic gains for both sides. From the Indian perspective, there is a need to access Chinese investments, but also expertise in manufacturing. India, as you know, has been trying to bolster its own manufacturing. It sees that it could gain from China in certain like areas of battery technology, renewables, electronics, where it does import a lot of things from China at the moment. So some investments carefully chosen could help India integrate into the global supply chains better and import less from China and manufacture more on its own. So some of that is driving this economic reset as we see it happening.
Yeah, I think for India, China has the critical technologies, the materials, as you say, to really fuel those manufacturing sort of ambitions. You know, for China, I mean, India has this growing middle class, right, which is a great consumer market. So those are the sort of the ties that we could see. What are sort of the economic and strategic differences, though, on both sides?
I think the first is the trade deficit. India runs about $100 billion deficit with China, and China doesn't at the moment import anything of substance really from India. So I think that is a deep divide in the trade relationship. But I think there's a larger ambition that India has, that is to one day access both not just Chinese expertise in manufacturing, but also one day try and capture China's markets. And there is a tension there. We've seen that with the Apple supply chain moving to India rather quickly, that has possibly given Beijing some pause. We saw restrictions come in on Foxconn employees being able to fly into India. There were some restrictions or slowing down of like engineering goods, tunnel boring machines to India in an effort to possibly signal trade leverage or even like slow down the supply chain shift. And other than these economic tensions in manufacturing and like what India's potential is in manufacturing, there are deep security concerns. The border, as I mentioned, remains a key area of divide. There's issues about China constructing the world's largest dam, just like miles from India's border. There's the Dalai Lama and his succession and this large like Chinese diaspora in India, Tibetan diaspora, excuse me, in India that creates tension between this relationship.
Yeah, and I guess it's also that question of it's not just the India-China relationship, it's also the US and its relationship with India as well. And we've just had this reporting this morning, for instance, President Trump saying that India's offered to cut its tariffs to nothing. I mean, what is that dynamic now starting to look like?
I think one takeaway from that statement is that trade negotiations do remain live in the background, even though the relationship publicly has gone through a lot of turbulence and tumult, given a lot of criticism coming from President Trump's advisors towards India. I think it remains to be seen how much India has offered to cut tariffs. We do understand there was initially an offer to cut down all tariffs on intermediate goods, which is a large portion of what the U.S. exports to India. But I do think there's going to be some firmness on Indian red lines that will continue continue on agriculture and its dairy markets. So while they may offer to cut down tariffs in other areas of trade, I think Indian red lines on agriculture and dairy will remain firm for the near future, at least.
Chetna, it's great to have you. Chetna Kumar there from Bloomberg Economics on, of course, Modi's trip to China. Coming up next, China's aluminum factories fight for survival amid a brutal price war. We have the details coming up next. This is Bloomberg.
Well, China's aluminum factories are shifting their focus to more specialised products amid a brutal price war in the sector. Let's get more with our metals and mining reporter, Martin Ritchie, who's been looking into this story and joins us this morning from Shanghai. And Martin, it's really interesting. And I mean, it seems kind of, I guess, relatively straightforward on the surface. You know, you've been maybe making products that are used for the property. Now the boom is over, so you've got to move into something that's a bit more specialised. But at the same time, how easy or straightforward is it for factories as well to make these pivots?
Yeah, so the background here, as you know, is price wars in China, which is the big topic of this year, as you know, and the government's efforts to try and ease this kind of deflationary movement in the economy. Now, for aluminum, in the south of China, in Guangdong province in particular, there are areas there that are dominated by kind of fairly straightforward aluminum production. Commodity grades. It produces things like aluminum for furniture, for bathroom fittings, stuff that goes in your underground trains. So it's all kind of infrastructure and real estate linked. But now that that's all kind of faded, there's far too much capacity for these kind of commodity grade companies. And when I visited there, people talked about this being, a very terrible time for their industry. Far too many companies competing for a kind of for a shrinking number of customers. So what we hear from the companies there, at least, is that they're trying to sort of move up the supply chain, move up to higher grade products, talking about producing aluminum not for home furnishings, but for consumer goods, electric vehicles. They also talked about robots as well in the future. These are all very big growing markets for aluminum, but there's so many companies trying to do the same thing that they're going to face a lot of competition there as well.
So obviously we've seen this anti-involution campaign trickle down in different ways, right? When you take a look at the industrial metal sort of space. And how do you see it playing out when it comes to aluminum in particular here? And it seems like right now it's really just survival mode for a lot of these kind of smaller sort of firms.
Yeah, I mean, it's interesting because with aluminum, it was one of the primary targets of the first round of China's supply-side reforms last decade. So the primary aluminum industry, the ones that make the initial metal, where all the electricity is consumed, huge, giant industry in China, they've actually got a production cap already. And they're actually hitting that already. And companies are building smelters outside China because of that. But for these factories that I visited a bit further downstream, there's not been any great policy moves. They've been told, they need to have certain levels of energy consumption, kind of technological upgrades. So that's wiped out a few of the less efficient firms. But really, I think what we'll see is these price wars flushing out the smaller players that can't upgrade, that aren't profitable enough, that aren't big enough. So it's going to be a kind of traditional kind of scramble for survival over the next few years for these companies. And that's what we heard from the managers of the companies we visited down there.
Martin, thank you. Martin Ritchie there, our Bloomberg Metals and Mining reporter joining us out of Shanghai. Some other top corporate reads that we're following here today. Nestle has dismissed its CEO after only a year on the job due to an undisclosed office affair. The Swiss food giant named Philipp Navratil, who heads the Nespresso coffee brand, as his replacement. The change extends a period of turbulence at Nestle after the firm abruptly fired Frixe's predecessor last year due to poor performance. Now, Bloomberg has learned that OpenAI is planning to build a massive new data center in India. Sources say they're currently scouting local partners to set up a facility with at least 1 gigawatt capacity. The exact location and timeline of the potential project remain unclear, but expected to mark a major step for OpenAI's Stargate-branded AI infrastructure push.
Quick check on markets here, and we're taking a look at solar stocks this morning. They're actually rallying across the board here, and that is after we had some updates from the SCO, but essentially there's this vow to increase the installations of solar, and so you're seeing again that coming off the back. In New World as well, another stock that we're watching here this morning, because we have seen the company looking at receiving or denying rather these reports that it was looking at funding or receiving rather funding proposals. So you're seeing that stock yesterday in the green, up 7%, but today under pressure so far. We did have some reporting as well from JP Morgan around this, what could be the next steps for that conglomerate.